is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hi folks, Basil Chapman here. Tommy O'Brien's a little under the weather, so I'm taking his place here just for this hour, and then I'll do my show, the Tiger Technicians Hour. So we're looking at, just let me do this right now since the market has, I'm always used to the market being open when I talk about it, so I talk about the indexes and the cash indexes. Right now we're looking at, here's the E-mini futures. Now I talk about this for a long, long time. I'm working on some kind of a methodology that isn't, there's nothing that's foolproof, that just gives better odds of being successful. I talk about a 2-click session that is very, very often throughout the month. There are times when the E-mini, the S&P E-mini, it could be the Dow, but I'm talking about the S&P, can give you an entry point and an exit point. And it could be one that gives a huge time and price move, and then you get out. You even have a choice of when you want to get out. Sometimes you don't have a choice. For instance, yesterday I had spoken about this. Oops, I didn't mean to do that. Put in a little down arrow by mistake. Here's the E-mini. This is the 10-minute chart. And I wanted to show you something. So yesterday we were talking about this during the show, 314 there. And look at that move with the E-mini. Held the 200 period, this orange line, the 200 period moving average, and then it crossed positive, and from was it correct? Yeah, then from 1 o'clock, let me just check on this. That's on the 14th, yes. 1 o'clock in the afternoon, crosses positive, it goes from about the 52.40 level all the way through to here, and that was at it was 1 o'clock in the morning. Oh, that's right. Sorry, I wanted to talk about it, not on this one here. I want to talk about here, where we had early in the morning at 8 o'clock, when the 9-period moving average crossed negative in the 10-minute chart. Look what happened. From here, the other one gave a very nice move to the upside, but the one I really want to talk about in terms of a 2-click session is that you could have gone short right here just based on this one indicator. And this is what I'm going to talk about in my Tuesday webinar for subscribers to Opening Call. And you can become a subscriber. It's, you've got 30 days or 29 days. Then if you don't like it, you can just cancel it with money back. But look at this. It goes pink, and it goes pink all the way to right there at any point on the big move down from the, let's call it from the 52.39 area all the way down to 51.96. You could have got out. It was pink, and then when it did cross, it crossed right here, and that was a little higher. That was at 52.19. A huge move, and then it turned up, right? So within that, and then now a pattern that I'll talk about as well is that in the overnight session, very often you get this narrow range, which forms like a bowl formation, a very kind of shallow bowl, and then it either breaks out to the top, and then it takes out that crossover. And look what happened at about 52.29 this morning. This is not the time. This is the price of the E-mini. This is the June. We're looking at a crossover negative where you could have gone, you could have sold, and you could just wait. There's nothing to do now until it crosses positive. So I just wanted to talk about that. Those are techniques that I'll be talking about. And that's the exact same application. And now I want to do this right now. So I'll go through this since it's the morning market kickoff. I know Tommy loves to talk about the fundamentals to put it together with the technicals. I don't do that. I talk about the technicals. I do add fundamentals, but it's really a very different type of analysis. I don't look at PEs, etc. Tommy does a fabulous job with all that, putting it together. Let me just show you. So here's the YM. I'm going to go over to this particular page right here. And here's the Dow. And I have on this left side chart, I have just three price movements. I have the candlestick of the Dow. Maybe I'll go to the YM. Candlestick of the futures of the Dow. I have the 9 and 14 period moving averages, and I have the on-balance volume. I use that periodically. It gives fabulous signals, but you have to know how to use it. It's a little more complex. But the one on the right here is exactly the same thing. All it is the closing price intraday, every day, a daily chart of the futures. It could be anything that I show you here. That's the thick gray line. The 9-period moving average is above the 14-period moving average, and that is positive. Look what happened. It just turned negative for one brief moment, and now it's gone positive. When it goes pink, it's negative. When it goes green, it's positive. And look at this, from the November 3rd crossover right there. It's been green up until that moment. And then for a day or maybe 2 days, you got out and you had to get back in. So you would have lost a little money there because you would have got out pretty much at the low, and you would have got back in as it was rallying. So, but look at the move on the upside. So we have been long in long-term positions in the Dow Diamonds, and then from October 2022, we've been long the UDW. Never do this. This is the 3 times long instrument. It's really a short-term trading instrument. Yet we've had it. Some subscribers have still got this. And it's done fabulously, even though it gets shrunken every single day. But nevertheless, I decided that this particular, we wanted the diamonds and we wanted the UDOW. But on a short-term position, we've gone short the Dow. And one of the reasons is I'm anticipating that S, the pink S, which says that you've now flipped to a sell signal just on this one indicator, the pink indicator, and green is long when it's green, and here it is green, hasn't turned pink yet. I'm anticipating that there's going to be a move. I'm anticipating that the E-mini, which has done so well, look at this, it didn't even flip green, not once since the 3rd. Let me just double check if it was the 3rd or the 6th. The 6th of November, gone green. One indicator could have gone off to what? So it's October, November, December, January, February, half of March. You could have gone away for, what is this, around the world in 80 days. Anyway, so here we are anticipating. This is anticipation. I don't have the signals. I have 1 or 2 signals that have given me the sign that says this is the opportunity that you can get in on the short side. But we've got a small position, not a very aggressive. And I'm anticipating that by next week we start to see pink. I could be wrong, but that's the anticipation. And look at the NQ. This is the NQ is the NDX 100. So on the left here, look, the candles are just starting to. I drew this in the NQ in the chart. Oh, I want you to do this. So let me go back to this, the real time thing. So this is the daily chart on the left, weekly chart in the middle, monthly chart on the right. Monthly chart is still very strong in the Chapman methodology. A buy signal that's upgraded to a buy mode, and that's the weekly chart buy mode. Monthly chart buy mode should go to at least 4 higher peaks. Peak A is the first, peak B is the second, peak C is the third, peak D is the fourth. The weekly chart is still only at a peak B, which should still go to a higher C, pull back, and then a higher D. And you've got to be careful. I'll be back. Dow futures are up 5. S&P futures are down 6. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Attention all opening call subscribers. Next Tuesday, March 19th, Basil Chapman will be hosting a live 90-minute webinar for all subscribers. From 4 to 5:30 p.m., Basil will take subscribers through an educative journey, giving insight into how he will approach this volatile market. Basil Chapman's opening call newsletter has a 30-day money-back guarantee for all first-time subscribers, and all subscribers get access to his trove of webinar archives, so you have nothing to lose. Go to the newsletters tab of TFNN.com and sign up today. We'll see you March 19th. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hello, folks, we're back, and I am Basil Chapman sitting in for Tommy O'Brien, and we're looking at the Dow down 20, Dow futures down 25, S&P down 30 at 39,000. Sorry. Dow down 25 at 39,323. There's this cup formation. What I like to do when I see something like this, I like to measure the left side, right here, look, left side, and then measure the right side when it comes back to the left side lip. Now, the Dow itself has slightly different pattern. The diamonds, the DIA, had almost within pennies of the left side high of 392.85. On Wednesday, it went to 392.79. I mean, 6 cents away from breaking to a new high. There would have been a leg C in the weekly chart, and that leg C would have continued in the monthly chart. So this is going to be very important. So I like to do a measurement of the left side and right side. Let me just do this. The stuff you see here is because every day for my subscribers, I do an analysis and I'll tell you exactly what I'm looking at for the general market, but based on mostly on the Dow. It could be any of the futures. If you're doing technical analysis, it doesn't matter what's in front of you. You do the same kind of analysis. Maybe not get the same result. So look at this. Here, the 9-period moving average is still very strong. Here it is still strong, but a little weaker than it was. And the MACD is the MACD, moving average convergence divergence, is just been pulling back. So for those of you who use the MACD, I've always said you can use the MACD because the shape of what you're following, look at this, the shape of what you're following invariably is being mimicked by the MACD because it's based on the criteria that's given to you by the price movement itself of the symbol. But within this context, look what's happened. What do you do when the MACD is failing? You would have been short, and the thing's going, you've got a divergence here. So that's why I say my instrument, and this is what I'm going to be talking about on Tuesday night. Probably do tonight when I do my weekend overview, which I usually do on Saturdays. I'm going to do tonight so I can have some free time for the weekend to be able to prepare in an orderly fashion based on the market activity now. My webinar, I already know, of course, exactly what I want to talk about, but how I would introduce everything. And in this particular case, I want it to be as practical as possible. A lot less typed words, a lot more visual, so you can just see it exactly. So what I'm saying is, this is the indicator of last resort for me, that green line above the black 14-period moving average, the 9-period moving average green. But look, a lot of the technicals are already weak. The stochastics way down at 66, over 80% is great. Over 90% is fantastic if you're long. This is starting to fail. The relative strength, that little gray line, is starting to make lower lows and lower highs. The on-balance volume is giving you a turnaround at exactly that ictus right there. So I'm looking at this and I'm saying, now, I had a question in the den about what exactly is a two-click session. And, I can see OB1 talking about it's just because it's green in, was it gold? Let me just check. Gold. Oh, it's red. I thought because it was green, you were talking about St. Patrick's Day. All right, let's get back to our story here. And what I am looking at is within the context of the E-mini, turning down 15 points. And what I said was this turnaround, certainly in the 1-minute chart, gave a fabulous turnaround right there. There's the same thing I'm talking about. You see this cup formation? Look at the left side high in the E-mini at 6:42 this morning when it was at 5230.00. Look, everything was great. Look at that turnaround of the on-balance volume right there. Then it retests with a slightly lower high in the on-balance volume. Stochastics way down. MACD is deflecting lower. The green 9-period moving average is getting closer and closer to turning down. So I love that. You do the left side, right side time price match, as well as a vertical spectrum of what's working and what's not. Failure pattern. And they are at about 529, 52.30 or 52.29. If you clicked a short position, it did not take out that high. It kept testing it, and then it turned around. That happened to be a peak E in the 5-minute chart and a peak D in the Chapman wave in the 10-minute chart. So if you had that click, you could be sitting now, and at any point at this particular stage, you can either say, maybe you have more than one position. You can say, I'm getting out of one. You're going from the 52.29 to 5200. Or you could just say, you know what? I think this is going to be a weak session. And you could say, I'm going to hold this, try to hold it all the way into 3 o'clock. We'll see if whatever the big bounce is, there's always a bounce, what happens there. But then you can monitor. So that's a 2-click session. 1 click, and you can wait a long time, sometimes 4, 5, 6 hours before you get out of that position. And we've had it on the upside a couple of days now. We've had it potentially on the downside. But yesterday also gave you a very strong move back to the upside right there. So look at that. Sharp move down, then a sharp move back up. And look how that 200-period moving average became a resistance for a moment. Then it became support. Then it became, you just smashed through it. It took you 4 sessions, 4 10-minute sessions. Actually, out of 6 sessions, took 5 of them to hit that 200-period moving average, and they'd be repelled to the downside. So let me just do a quick summary. What's the time now? 9:24, perfect time. So what I want you to do is to do this right here. So as I'm looking at it now for my subscribers to my opening call, and one of the reasons I've done it is I'm using certain technical indicators. So we've been short the Dow. I'm going to go to the Dow itself, the cash. Short from over there, just off the high, and we've held that short position, and that's on a trading position because I believe that the long term, the weekly charts are fabulous. Yeah, you can actually pull back. You could pull back from 38,900 even down to the 37,000 level, and still even further, and still be in a very bullish mode because I'm still expecting a C and a D. Higher peak 1, that'll be C, and then another higher peak 2, that'll be leg D going to peak D. All right, so that's it. But look at this up channel, another technique I'll be talking about. See how you got repels from the inside track repellent zone? Now you've gone to the Chapman Wave inside track propellant zone. And if we take it out, this is a Chapman Wave Roman candle I mentioned to my subscribers this morning, and we know the Chapman Wave Roman candle with a long wick, especially if it's a red one, if you start to trade halfway into the wick in a shorter time frame, this is a daily chart, so that'll be 120-minute chart. If it trade below 38,800 and 38,840 for more than 60 minutes, there's a real good chance that not only will you test yesterday's low, but you'll take it out. That's the way I'm looking at it right now. The E-mini, I want to go to the S&P cash. E-mini, no, so this S&P, still fantastic action, but it's a little miniature Chapman Wave Roman candle, and if it trades under 51.40 for 60 minutes, watch out, you can go quite a lot lower. QQQs already starting to pull back a little bit sharper, and I'll be back. This is Basil Chapman sitting in for Tommy O'Brien. Be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back. Basil Chapman sitting in for Tommy O'Brien, a little bit under the weather, so I'm taking this hour. The Dow's just opened, it's down 90 at 20. Okay, let me just do this live. The S&P is down 27, the Dow is down, is moving quickly, 84. The futures are down way more. Nothing to see here, really. There's a little price you can see. To get the 9-period moving average to go under the 14-period moving, you'd have to get to the bottom of this Chapman wave inside track propellant zone and start to make it a repellent zone. You'd have to see 51. Oh, it's going to take a lot. 50.64, somewhere around there. Oh, man, another 60 points to the downside. So at any point you can get a bounce. Yes, a question came up. Could we have I was talking about a 2-click session. Could it be a 2-click session where you're getting out now and now you're going to have another huge move to the upside? I want synchronicity. I don't think yesterday was a very bearish session for the general market. But if you're looking at the SMHs, look at this. That 9-period moving average is still really positive. But look at the price movement. And I don't want to go through all the round numbers. I'm going to do that in my webinar. I'm getting a lot more in terms of conclusion as to what I used to be able to do it very well with single stock moves where you get a round number, how you move away from it. Was it occurring at an exact low or was it a high? A round number means that you like 100.00. And in fact, you had MSTR, Meister Singers. No, I'm talking opera here because I saw the Met live the other day, live performance on HD Cinema. It was absolutely fantastic. It was La Forza del Destino by Verdi. And Verdi, I mean, hardly anybody knows Verdi, but Verdi was the equivalent of a Beethoven, a Bach, a Mozart, one of the all-time unbelievable geniuses in the artistic world. And La Forza was just, la da dee da 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 da. Oh, it was just stupendous. Anyway, my micro strategy had a round number, 1774.00. Can you believe it? All-time high 3 sessions ago. It's trading at 1580. It's not a big deal. It opened almost every day. It's been opening with round numbers. Today, it didn't open with a round number. It opened at 1600.01. Anyway, so we'll see what happens. It had a high today so far of 1605. These round numbers are just, it's amazing. So my contention is that this is like FOMO, just fear of missing out. Why would you spend 1,774 times 10, 20, 100, 1,000, whatever these fund managers are putting in place and say, I wanted it exactly 1774.00. Just there's something about it it just seems to me that there's hysteria involved. I just can go over. I don't want to waste time right now because I've done it almost every day for the past, I don't know how many weeks, seeing these. Look at this. I can't even put them in here. It's covered up so much. Even 1229.00 with a 1212.00 open for super micro at an all-time high on the 8th of, so was it the 7th? No, it was the 8th of March. Trading right now at 1,098. It has already got a high. It opened at round number 1,092.0. You tell me, I ask everybody out there, maybe you're able to put it into a program or something. I don't, I probably could do it. I have the ability. I've just been a little lazy about doing it. Just to do a scan on major big caps and looking at round numbers. I don't think I've ever seen this number day after day after day. So this is trading today. It had a round number of 1,092 open, 1,129.00 high. Of course, that can be taken out because it's trading right now at 1,107. But isn't that amazing? And it goes to peak D in the Chapman wave. It did a peak D once before. In April, in February, it had a high of 1,077.87. And then at peak D, pulled back sharply to the 14-period moving average, and then gapped up, pulls back, and then gaps up again, pulls back, made a little gap right there, and now it's filled at least one of the gaps, making a dreaded H pattern. Dreaded H just means you look like an H. You come down, you make a little arch formation further to peak A or B, take out the left side low. So okay, I don't want to go through that too much. I've already been through it so many times. I my contention is that it's going to be meaningful over a period of weeks. That's all I can say. And I'm suspicious of what's going on now. I think that the SMHs down to 64 right now are just telling us in the rotational aspect. After all, you've got Microsoft moving up yesterday quite sharply to a new to all-time high of 420. What was that? I did call it. It's 427.82. And pre-market it was up quite nicely, but now it's down 5 at 420. And 420.82 was the previous high. I could because this is the starting point down here in the 380s. I could call this. I should really give it an alternate count because it is just a continuation of this cup formation where I'm going to give a test of the left side high of 420.82 and yesterday's high and look at and see at the end of the day, is there a failure or is it still showing strength? So you've got that divergence, and I suspect that we're looking at just a normal breather. I mean, even now the Dow's down 62. We should have, when I get really strong sell signals to sell mode, and I haven't even got a sell signal in the S&P, the Qs, or the SMHs yet. When I get them, usually we get really strong double-digit futures down 48 to 52, down 370 to 425 in the Dow futures, and the Qs are down as well. And there's a rally attempt during the day, and then it closes at the low of the day, and then it does the same thing, rinse and wash. It does the same thing the next day. That's bear market material. Right now, this is still showing residual strength. There's a little washes come in of buying. Okay, so with that said, I wanted to go to gold. I didn't do the IWM, I'm sorry. Let me just do the IWM. IWM is the Russell 2000. How the IWM acts under these conditions is going to be really important. Little green candle today up 62 at 202.65, very close to the 9-period moving average. I've seen it look before. It's failed to cross negative and it's stayed green, and that's really positive. Or it goes pink for one session and then goes green. That's very positive. If it goes pink for 2 to 3 sessions, that means you're now in play for a down move. But all I'm saying right now is that I'm anticipating there's a consolidation going on. Let's go to gold, GC. Look at that, down 4 at 21.63. Very nice action. Huge move up. I suspect that it could be one more day, and that's going to be the big test. At 21.63, does gold slide under 21.28 and then close under 21.28? That's going to be important. Why? Because the weekly charts had a fantastic move, but now you're digesting the leg C. It should be a peak C right here, and there's your inside track. What was a repellent zone could become a propellant zone, and look at the monthly chart. You just snuck above it. And now you're on.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Thank you, Pat, and the Tiger YouTube. Yes, Apple did have a round number close yesterday, 173. So gold is down 5.7. I was asked if I would look at MUX the other day. I actually didn't see the email. I'll do it right now. It's made a peak C in the Chapman wave methodology. It's holding quite well. MUX is McEwen Mining Inc., gold, other metals, I believe. Look at the weekly chart. It's done this now. No, this is not my show. This is Tommy's show. I'll do it in my show if I remember. This is called a restart. When you don't take out the initial starting point, and you keep making this A, and the A pulls back, doesn't take out that the low, but it keeps making, you got to count each successively peak after that. So that's an A, that becomes A, B, and that technically would be a C, but no, you've taken out that. So now you're starting fresh. So this is the first A of this magnitude that you've seen in quite a while in MUX, MCE, and McEwen Mining. MUX is the symbol, down 8 cents at 838. So what we're looking at is the MACD's up, stochastic's up nicely, the on-balance volume starting to rally in the weekly chart. The histogram of the MACD has crossed positive. That's a good sign. And this is the first week in quite a while that you've got an L, which means that the 9-period moving, I have to wait until Friday at 4 o'clock. But right now, you've got an L saying, hey, if that L is where the 9-period moving average crosses positively, it's done it before and fails. What you want to see is that the support level of 780 is at 840 right now, and that's at 784 is the 14-period exponential moving average in the daily chart. You want to see that at least hold, even if it pulls back, it must keep closing on a worst case basis under that. The best is that if it goes to it goes to the 9-period moving average, not the 14, and holds 813, or before then, it can make a leg D 1 penny above the 889 high of the 13th, goes to 889 high, goes to 890. That's starts leg D. But what you want is not just a penny or two above and then pull back. Leg D has to be sharp to the upside. So this is acting very well. And 917 is the target for the 200-period moving average. It doesn't even know about a 200-period moving average. Remember, I like to put these indicators on and just to let them tell me. I don't have to tell it. The last time it touched it and broke above it was back in May, I think it was, of 2021. Look, right there. And then it failed. Every time it's gone there, it's failed. The last time that it got close, after coming all the way down from the 14s to the $2.30 area, was right here at this peak E. Oh, running a little slow. That's interesting. I thought I refreshed everything. Okay, there we go. Right there. That was the week of the 17th of April. It went right to the 200-period moving average, but it couldn't touch it. This time you've got this bull formation, and it says, I'm going to try. Oh, don't tell me you froze up. Oh, I haven't had that happen in ages. No, please don't do that. Not when I've got another hour and a quarter to do. Oh, there it is. Okay. So this is a brand new leg A. And I need to check. Is that? I don't even want to click, but I have to. No. Oh, you know what it is? I've got too much open, I guess. I really don't want to mess up. It's been so great. Oh, what's going on here? Okay, let me see if I can do this one more time. If it doesn't work, I'm in trouble. Okay, so telling me if I think that was a low. That was a lower low than that. So I believe this is and 917 this time should be hit. Doesn't say when, it just says that there's enough power that it should get there. Now, please go. Okay, thank you very much. Okay, so that's MUX. It's acting very well, and I believe that there's a lot I can draw. I don't want to draw right now. I'm going to have to refresh during the break when we do the update and all that at 10 o'clock to see if I have enough time. But in the meantime, we're looking at it down 6 cents at 8.40. Yes, it's acting very well. And most of the gold stocks have done that. Silver, SI, silver's trading right now up 33 cents at 25.39. Now, this is fascinating. You know how I always talk about gold and silver. Gold already starts to move, and then silver says, hey, wait a minute, wait for me. And then gold sort of stalls, and then silver is acting well. And then gold says, wait for me. And then gold and silver go together to the upside. Then they both take a bit of a breather. Sometimes it's more than a bit of a breather. So silver now is looking much, much better on the daily chart. Weekly chart started to improve a lot, and that monthly chart, it's just stuck in a range. But silver right now is acting quite nicely. I want you to go to high-grade copper, because high-grade copper, isn't this interesting? How can there be a market pullback if the copper is still acting so well? Not the monthly chart, but the weekly chart's gone to a leg C. The daily chart's gone to a leg E. And MACD's good. Stochastic's fabulous at 90%. On balance volume was a little bit overboard, pulled back, and now it's coming back again. The relative strength is quite good. This is really very good action in copper. So that's the reason why when I talk about the markets, I'm saying I'm anticipating a rotational correction. I'm anticipating that the semiconductors are going to take a breather. They've just had a spectacular move. They need some kind of a rest. But what are we looking at? We're looking to see what will take the place. In the meantime, what's going to work, or does everything come down together? But the fact that yesterday was only 100 and something down, and the Dow was down 301 point and came back, this is it. For a real intense waterfall cascade that goes from a real quick sell signal to sell mode, you have to get the S&P down strong, 48, 52, 60 points, and then repeat the same thing the very next session. We haven't had that. What we did get, and I mentioned yesterday in my show, was that the VIX index, the VIX, VIX, did rally, and then it sort of stalled. And I like that action, that you're coming off an all-time highs, while at the same time, the VIX index is kind of this time, whereas before that big move in February, was that February the 8th or something like that? February the 13th. And the huge move right off the high, I said, that's just too much too soon. This is much better. Now the VIX is up 57 cents at 40.97, starting to get some impetus to the downside. Dow down 122, S&P down 32. I'd still prefer if Dow was down 280 to 350 with a VIX like this. So it means, but what's really important, I'll be talking about this in my webinar on Tuesday, this inside track propellant zone in the VIX. Remember, I do Chapman wave notations in the VIX. but it's absolutely useless. I just do it because it's impossible for me not to look at anything that moves up and down, even if I was looking at the weather report without doing an analysis, Chapman wave A, B, C, D, E, F, G analysis. So, but what I also did was, this is much more potent and important. This trend line in the weekly chart with rising highs and actually rising lows and rising highs tells me that the VIX is becoming way more important. And just as an indicator, it's kind of useless otherwise, but only when it really works. I'll be back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, this is 9:54. At 10 o'clock there could be some news that suddenly gives a big spike to the upside, but you remember what we were talking about. Follow the pink line. The pink line still says down. We'll see what happens after that. So within that context, let me just say, so the VIX index, maybe it's a little too high right now, 52 cents. So maybe we need to have some kind of a rally to get this VIX to say, nothing to worry about here. But look at the rising highs. That to me is really important. But the monthly chart says ho-hum, ho-hum, ho-hum. So let's just go back to this right now. Just to sum it up, looking at the Dow, vulnerable right now, not very vulnerable in the daily chart more than the weekly chart, which is still fantastic. Looking at this possibly starting to go underneath the Chapman wave inside track propellant zone. Haven't got the 9-period moving average negative. S&P right now is the same thing. S&P is turning down. It's not a big deal yet, 31. Only if it really comes down at 51.19 right now. If we start to see it trading the 5,090s, by Monday, I think we'll start to see a much deeper correction in the daily chart. Look at that weekly chart. I don't think we're going to make a new high of 51.65.63, 1 penny above the high of 5 days ago. But that'll be a peak B, a very mild one, a very mild peak A. Just unbelievable, the power of this move. So within that context, I'll be doing my show coming up, the Tiger Technicians Hour. Hope you can stay for that. Check out my opening call, my daily newsletter. As I say, we have been starting the short positions. I wanted to add, I didn't even mention, look at this, Toll Brothers, nothing after all that with the yield. I didn't even do yields. Look, TLT, right now the TLT is down, so the yields are going higher. There's a lot going on, and yet those builders are holding in so well. Look at this, Toll Brothers up 70 cents right now, made an all-time high in the 124.67 area. Just 3 days ago, Lennar, same thing. Lennar, there it is. Look at this. Lennar had a big pullback. But if you look at the weekly chart, big deal, red candle, but it's still way above the 9-period moving average, and the 9 is way above the 14. Leg D, this is where you got to be careful of the peak D in the Chapman methodology. That's where other things can happen. So it's gone from the 167 down to the low today, 151. Now it's come back a little bit. Lennar. I'll be back for the Tiger Technicians Hour in a few moments. And Basil Chapman sitting in for Tommy O'Brien for this hour.